I'm here with Jim Perry, who's a senior strategist with Market Insights and somebody who I know personally is going to conferences, because Jim and I were together in Cooperstown, New York about a month ago. And Jim, you have been on the conference circuit, correct?
Yeah, it's been interesting getting back out and getting on an airplane and actually doing some of these presentations, live presentations with a real audience. It's exciting, actually.
It's really quite an experience, but we're talking today virtually. And I asked Jim to reflect a little bit on one of the things that he spoke at the New York Bankers Association conference on, which is humanizing the digital experience, because digital is huge for banks of all sizes. It's something that many organizations are investing a lot of time and energy in. And I think, Jim, one of the things that you've been able to do in your work is see some of the things that matter if you're going to be successful in the digital journey. So I guess I'm interested in what you think is absolutely critical for a bank that's trying to utilize the capabilities that are clearly present.
Well, one of the things that I'm sure probably every consultant, every speaker is out there talking about is the degree to which the COVID pandemic accelerated a lot of digital behaviors. So yes, banks, credit unions, et cetera, they were all able to lean in one way or another in order to meet the needs that were presented when you had to close up your branch. Great. But now everybody's in this, like, taking a deep breath and trying to figure out, okay, how do we kind of either leverage what we learned during that process, or how do we kind of adjust and keep migrating? And the one thing I always go back to is fundamentally, in a digital age, in order to keep your experience human, in order to keep that personal connection, you've got to utilize your data. You've got to have the capacity for data analytics that is now table stakes. It used to be a situation where people could kind of cut and paste and duct tape something together. But I know there's still institutions out there that part of their customer data is sitting in an Excel spreadsheet somewhere. And so they're not getting that 360 view. But that data, not only their customer data, but the market data, that should be the very baseline. That's the foundation on which they should be making their strategic choices moving forward, as well as making, small campaigns work. How an institution evolves moving forward on that digital transformation journey really depends on what their customer data is telling them.
So one of the things that banks today are juggling as they put their budgets in place are things like investments in this versus that. And you told a story about somebody who approached you recently at a conference. Maybe you could tell that for the
Sure.
to illustrate the point.
Yeah, I was talking to a banker that came up to me and said, look, we're trying to make a decision whether or not to direct some capital into ITMs, or if we should use that to deal with our mobile app, to kind of upgrade our mobile app. And he said, what do you think we should do? And I said, well, that's really easy. What I think you should do is you should look very closely at what your customer data tells you about the utilization of your mobile app right now. What percentage of your customers are using that? How frequently are they using it? Look at the entire, mine that data as deeply as you can to help you understand what's actually at risk if you don't update that mobile app. Because right now, as we all know, especially during the pandemic, people were confronted almost daily with new opportunities for high-end mobile experiences from other vendors, from other fintechs. And if you can't continue to adjust and upgrade and update, you're going to be at risk for losing those folks. Now, it may have been in that individual's circumstance that they had a small percentage of their overall customer base that were using their mobile app or using it frequently enough. And if that's the case, well, they might have then decided, let's do the ITMs first, because we know that part of delivering a digital experience in a branch footprint is still important, because we have a lot of branch-centric customers.
Right.
But I mean, there are banks that are making decisions about consolidation right now of their branch networks without really taking a close look at their branch-centric customers. You know, they might look at transaction data, but that's only going to tell them so much.
So let me play that out with you, Jim, because I know one of the things that Market Insights tries to do is share with people what you see in markets as a whole. What kind of sources of information about markets should community banks, for example, be focusing on?
Well, I think a lot of basic demographic level data, income level data, household growth, income growth, just to give you some sense of the trajectory. Generally, right now, our firm would look 5 years out at projections to see whether or not a community has a lot of potential. Of course, then you hold that data up against data about competition, you know, what percentage of kind of that wallet are you going to get from new potential customers because growth is happening in your community? Or if you're in a lot of, you know, communities right now, there's low growth or no growth, you know, the only way you're going to approach it, any kind of new growth, is if you're stealing it from somebody else.
Right.
And those are two very different kind of strategies.
So let me pose what's not a theoretical question, because as you know, having worked with bankers over the course of the last 18 months, the tsunami that was called PPP created opportunities for a lot of community banks who were able to step in some cases where national banks or regional banks were either reluctant or unable to accommodate small businesses and professional firms. So if you were a community bank that had brought in a lot of new relationships and don't necessarily have a lot of history with them, you may have opened an account because that was necessary to fund the loan that you made under the PPP program, but what kinds of things should a bank be doing now with this mass of new clients acquired through PPP?
Once again, I really think it requires a kind of looking more closely at what the data they have on those companies tells them about those companies and what those companies need. I mean, it really isn't rocket science to understand that kind of the profile of most of the folks who approached the PPP loan program, you know, have very different needs than some of your largest commercial bank or commercial clients. And so consequently, you know, trying to fit those two profiles isn't necessarily going to work. So you've got to align yourself with what those particular customers are going to need more than anything. Like, you know, I think of folks who don't necessarily line up their payroll options and their payment options where their bank data isn't easily lining up with QuickBooks, as an example. It's like, why wouldn't you do that? But that's something that a smaller business is essential. You know, they need those kind of tools in order to function. And they need kind of that integration to occur between their bank data and what they're using to manage their firm, to manage their business.
I think you're absolutely right. And as a small business person myself, I can tell you, using QuickBooks, the people at Intuit know a fair amount about what I do, and in fact are encroaching, as fintechs and their partners often do, by inviting me to apply for a loan. I get an email roughly once a month on that topic. There are others that are doing the same. One of the things that you brought home to me is, this question about digital or human is really not, the or is not the word that a banker ought to be thinking about. I think you phrase it better. What's the message in terms of integrating digital and human?
Right. It's not or, it's and. It has to be digital and human. Mm-hmm. And one of the things you and I were talking about is that in order for the digital to work, you've got to have the human fully aligned with those digital platforms. You also have to make sure that if the digital is going to work, that it has a human element to it. Mm-hmm. I look at a lot of what's being done right now with integrating mobile into, mm-hmm. or kind of a video rather, mm-hmm. into mobile and online, mm-hmm. So that in their digital experience, you're actually interacting with a human. Mm-hmm. One of the examples I often use is a small bank, about 300 million, I guess, mm-hmm. That has a lot of farmers. They're out rural mm-hmm. areas, they can't do banking hours all mm-hmm. the time. So using this kind of mobile app, you can have a video interaction with the banker in the phone. Farmer can be out in his barn, like mm-hmm. doing his stuff, but he doesn't have time to come into the bank. Great. He can still talk to a banker, get the physical experience, but he's doing it on his phone.
Yeah.
And one of the things that I think people tend to forget, they like to put people in buckets. Here's your retail customer. Mm-hmm. Here's your small business customer. Here's your mm-hmm. commercial customer. We're all human beings. And one of the things that happened during the pandemic, especially, we all found that when we can't have human connection, we can do things digitally. Yeah. Now the challenge is to make sure that as people keep using those digital tools, we find ways to integrate the human connection mm-hmm. through those digital tools. And some of it's really simple stuff, like making sure that the language we use mm-hmm. in our digital space sounds human. Yeah. Because so often it can sound very, forgive me, robotic. Mm-hmm. But I think that is probably the bigger challenge, because a lot of bankers are still thinking it's either or.
Yeah, I think that's a really critical takeaway. And I do believe as we go forward, the people who are going to figure this out are the people who realize that no matter how good the app is, there's still a need for people that can help clients connect the dots, can help them make a more informed decision. And that gets to, an issue that we've talked about before, which is how to continue to develop the talent and the skills of your people. But Jim, this has been great fun. I appreciate your expertise. I hope to run into you at a conference somewhere, but sure. In the meantime, I hope if anybody has any questions, they'll reach out to you in the notes on this. You'll be able to find the way to connect with Jim on LinkedIn. But Jim, thanks for being with us today.
Great to talk to you, Ned.